Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. We all want more time to spend with family and friends. We want time to engage in a purpose greater than ourselves, to have some sort of meaning in life. The challenge is we spend most of our time working to make money in order to live. Let me say that again. We spend our precious time working to make money in order to live. Imagine a life where money could make you money to live in order that we could work less and have more time for the things that matter most. Well, you can. Learn how from everyday people who are making this a reality. Don't go anywhere. We'll be right back. Coming up, Brandon Crombeen teaches us how we can make money investing alongside the largest developers.
Yeah, I mean, I think it's a big part of our strategy is to work with the biggest and the best. I mean, I think there's a long list of reasons why, from expertise, their experience, their reputation in the market, et cetera, et cetera. So we really want to make sure that we're working with those biggest and best. Obviously, their deal flow, the opportunities they're seeing are typically at the top of the pyramid. They're the first ones to see these opportunities. They have teams of people that are out looking for these opportunities.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own, invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rav. Welcome back. Remember, whenever you're offered any type of investment opportunity, you always want to go through 4 questions. Number 1, what is the return on investment? 2, when do I get that return along with the money that I put in? 3, what is the amount needed to invest in this project? And 4, what is the risk, the worst case scenario? So excited. My good friend Brandon's here. We're going to learn how we can make money investing alongside the largest developers. Brandon, thank you so much for being on the show.
Thank you for having me.
I love having people on my show that can teach us how money makes money so that we can enjoy things that are important in life, but it's even more special when a colleague comes on, from Greybrook, and of course I work with you there and more on the business development side of things, but I want the audience at home to know a little bit about my friend Brandon, who I call BJ. What's happening at home life, the kids, the different things. Do you miss playing, professional hockey? Talk a lot about that.
I can't say I miss playing too much. There's parts of it that I definitely miss, but keep busy enough with work and have 3 young kids, so there's lots to keep my schedule.
Now, I do have to interrupt for a second because you, were a fantastic hockey player with Tampa Bay Lightning and retired, and Tampa Bay is no longer even in the playoffs. So I think they miss you. I think we miss you. But it's very interesting. How did a professional athlete get into the finance game?
Yeah, it was a bit of a long story where I spent my off seasons while I was still playing, not only working towards my degree, but spending some time working at Greybrook's offices, learning a little bit about what they do, which ultimately led to me transitioning into that role when I was done playing. Yeah, and
you also have athleticism in the family. Right?
I do. I have my father also played professional hockey, so had a great sounding board and somebody that was able to teach me a lot through it.
In the athletic space, there's some, maybe lots, I don't know, that don't necessarily, they make a lot of money, but don't necessarily invest it right. You've had the ability to take some of your colleagues, some that are even still playing professional sports, and help them to take their money, to make money in order to have great quantity time with family, with friends. I know that's really important to you. Talk a little bit about this whole concept, and really should be the entirety of how money is a tool to be able to enjoy.
Absolutely. I mean, I think that's a big portion of what we do, and really our whole business is set up around that we're trying to be able to allow investors the opportunity to passively invest, like you talked about, alongside some of the biggest and best developers in the country, which again, obviously lets their money compound and work for them, freeing up their time and space to spend time with families or really do anything they please with their time.
You, like me, before coming on board and helping out with Greybrook, you were an aggressive, active investor in land development, right? And so it only makes sense that, hey, I'm doing this, why don't friends and families and others do the same thing? Talk a little bit about some of the fun stuff that's going on right now. Touch on this concept of is it ItsX Living, X Social Living? Talk a little bit about this new kind of phenomenon.
Yeah, it's a really exciting platform that we actually got down a few weeks ago to go and actually see and spent a few nights in the actual end user product. So really, in short, it's a purpose-built rental that really the whole platform's built around very high amenities. So live, work, eat, play, restaurants, co-working space, pool
restaurants.
decks. Yeah,
within this place where I get to live if I want to live there.
Absolutely.
And you say went down where? Where was this?
So we were in Miami.
Okay, this is in Miami.
Yeah,
okay.
Exactly. So
and this is happening not just in Miami, all over North America?
So our partners, Property Markets Group, have, I believe, 12 sites now across the U.S., so really coast to coast in large urban centers and continuing to look across the U.S. at other areas to deploy this strategy.
So, anybody from, probably not so much a student, but young professionals to, they rent this space, they rent a room, their own washroom, kind of share some common elements, but you're saying the amenities is astronomical in terms of size, in terms of the different things, and so you'd never want to leave that place.
Yeah, I mean, really, that's what the product's meant to do. So it's slightly smaller spaces in terms of whether there is the option to rent by the bedroom, where you have your own bathroom, you have a shared common area space, kitchen and living room, or your typical rentals where you're renting a 1 or 2 bedroom unit. But really, again, you're looking at smaller spaces, less total costs on a per month basis, but high amenities. And again, we've really found that the large majority in that 25 to 40-year-old bracket that's looking at this product really wants to live, work, play, eat all in one spot.
And just to be clear, they're renting it.
That's correct.
And we are building it.
That's correct.
And it's not a make and hold model. 4 or 5 years. We now pass this off to institutional investors, pension plans. Is that the idea?
Yeah, so really, again, very similar to what we would do with any of our development projects. And instead of selling the units individually, we would stabilize it, so rent out those units and then sell the asset off as a whole. So, a little bit shorter construction time period in South Florida than what we see here, whether it's weather and trades, et cetera, et cetera. So really get through the construction period. As you're getting close to completion, you start the lease-up program, again, depending on the size and scale, anywhere from 6 to 18 months of lease up till you have a stabilized building, which is, north of 90% occupied, at which point you would then look to dispose of the asset and sell it off.
Yeah, and obviously there's going to be zero vacancy. There'll be a waiting list to be able to get into this. So from an investor standpoint, and you label this purpose-built rental. So we're building something on purpose, but it's a rental play. We pass it off for someone to purchase this and put that in their portfolio, a large institution, pension plan. So as the investor, Rav puts, his $100,000 in over the 4 years. What's an annualized ballpark return that I can look at projected?
So we're typically targeting kind of right around 20%, low 20s in some instances for this type of product in South Florida. So we have one under construction that is 2 towers in Fort Lauderdale. We own another site in downtown Miami, and continuing to look not only in South Florida but throughout the U.S.
And this is on the purpose-built rental?
That's correct.
Oh,
all
okay.
on the X Social Communities platform.
Okay, because we're going to talk about partnering, just in our typical developments alongside the biggest players, but I just did want to touch on that because it's very interesting. And then also, we've done a show with you where you talk about this concept of value add. What does because we won't go into a detail on this show, but what does that mean, investing in value adds?
Yeah, so really when we're looking at value add investments, again, a lot of times obviously on the multifamily where we're buying apartment buildings where, again, there's any number of units from some of the smaller buildings might have 20 or to 50 units to other parcels that we're looking at 500-600 units, where we see the opportunity to go in and create value. So what I mean by that is we're able to acquire an asset that we see the opportunity to grow the net operating income, whether that's through creative efficiencies and lowering your cost basis, or going in, retrofitting some of the units, adding different amenities, et cetera, that will allow you to increase the rents and grow the net operating income on the asset, which obviously equates to a better asset value at the end of it.
So like the purpose-built rental, we then are giving this over to somebody who wants to put it in their portfolio.
That's correct. So obviously a lot of large institutions, pension funds, et cetera, have a large appetite for these type of assets. Obviously a very stable asset through different cycles in the economy. People need places to live, and obviously it's a cash flow producing asset that a lot of these institutions like to hold.
Yeah. I don't know which is which, if you are just a genius on the ice or a genius with the money in development. I love having you on the show. We are going to talk about real estate development, land development, partnering alongside the largest players, all the same thing when we come back from a break. I'm so grateful to have my good buddy BJ on the show. Don't go anywhere. Everyday Investor continues in a moment.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Clover Properties Rent to Own. Invest with a purpose. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rav. Welcome back. I'm talking to my good friend Brandon. I call him BJ. We're talking about how to make money investing alongside the largest developers in North America. First of all, BJ, thank you so much for being on the show. I love when my buddies come on. I'm always learning from you, and I appreciate that in our friendship. We've titled the show The Largest Developers, partnering alongside the largest developers. Touch on what that even means, partnering alongside, and why largest, and really we can only do this with the largest as opposed to, my cousin Vinny, who's a custom home builder.
Yeah, I think it's a big part of our strategy is to work with the biggest and the best. I think there's a long list of reasons why, from expertise, their experience, their reputation in the market, et cetera. So we really want to make sure that we're working with those biggest and best. Obviously, their deal flow, the opportunities they're seeing are typically at the top of the pyramid. They're the first ones to see these opportunities. They have teams of people that are out looking for these opportunities, and that's really where we want to enter the market.
And that's a really good point, the opportunities, because, ballpark kind of a percentage of how many of these opportunities are not even available to the public. They're not on the MLS. They're, kind of underground, word of mouth. What would you say in terms of a percentage-wise?
Yeah, it's a very large percentage. Obviously we see everything that's publicly listed, and we'll look at those. Truthfully, our track record, we don't have a lot of success in winning those open bids because people bid differently and more aggressively than we ever do. We have bought a few sites like that, but I would say it's few and far between. And really our expertise and really where we try to take advantage is, through our development partners, their networks, their team of people that are out creating these opportunities that are listings that never got listed. They've went directly to the owner, been working on it for 1, 2, 5, 10 years, and now have this opportunity in front of them.
The developers, they bring us the deals, and now we do our due diligence, because they're going to do it regardless. But now we, Greybrook, we do our due diligence and vet these to make sure that it makes sense for our investors.
Absolutely. So, obviously, we've done a lot of diligence, and as has the development partner on us before we're getting into business with them. But, we take what they've given to us, do our own diligence, use our own third-party resources, work alongside them, discuss how they see it, how we see it, and make a determination if it's a project that we want to proceed with or if it's not. Obviously, they then have the decision if they want to proceed by themselves or if they're going to take a pass on the site.
Great. Now we say we're going to do this. And so let's say we're doing a project, in the GTA or, around the area. Explain, Brandon, explain how it works in a nutshell. And you are a very diversified, or have been in the past, many types of investments. Mm-hmm. How does it work, and why do you like this strategy? Because I know you've invested yourself in numerous deals on the same terms and conditions as all the other, 6,000 investors over 30 some countries.
I personally really like it because I think there's a great risk-reward trade-off. Obviously, you have the potential to earn great rewards. At the end of the day, what you're investing in is secured against a piece of land. Again, obviously, not only do you have a great development partner working on your behalf, but you have Greybrook. We have a great team of individuals that obviously have a long storied background and history in this business. So again, looking at that and looking at kind of the potential upside that you have by being invested in these, the downside protection of the structure, the partners, and the actual asset gives me a lot of comfort to invest in it.
And how does it work? Like, where does Rav and Brandon's and friends' money go to? And kind of talk about the marriage between the developer and us.
Yep. So really, again, you're investing into a limited partnership. You have shares in that limited partnership. Again, that limited partnership owns the actual title to the land of what we're investing in. So when
Rav, Brandon, and friends put some monies together, what's the minimum investment amount?
The minimum's $25,000.
$25,000, and it doesn't matter if little old Rav puts his $25,000 in, and a humble big shot hockey player puts his $2.5 million in. We still are getting the same return percentage-wise.
Yeah, so everybody that invests on the same term, as you had noted earlier. All employees, the partners in the firm, et cetera, we all invest on the same terms and conditions as every other investor investing into it, and there's no preferential treatment. So again, whether it's the minimum or you are writing a significant check into it, you have the same rights, the same level of return, et cetera, as any other shareholder.
Okay. So we've got now this parcel of land. The developers brought it. Or we found it through our own means. We partner. We reach out to a developer. We put monies together through our investors. It's a limited partnership or a mutual fund trust if there's registered funds. That goes on title and then keep going. Is there a portion of that towards the marketing and sales center?
Yeah, so really when we're raising the capital, we're looking at kind of the full expenditure, the full cost of the total development. So really the lion's share of our capital is typically going towards the land acquisition. Depending on the type of development, again, if it's a land development process, obviously there's not a sales and marketing process. There's not as much soft costs. You may have some planning and zoning work that would be calculated for and raised there on the front end. But again, we lay all that out when we do our initial raise of what the capital is going to be used for, where it's allocated to. Obviously, once we get to the point where we're in sales, we've got sales, we get into construction financing, that's where we're using those purchaser deposits. We're also obviously getting construction financing in place to pay for the construction as we go through the project. And at completion, when people are moving into the units, is when obviously investors get not only the return of their invested capital, but their profit at that point as well.
Okay, so Brandon, Rav, and friends, we're putting our money on the land, a little bit on marketing. The developer puts in a little money for good faith on the land as well?
Yep, they're investing again alongside us on the front end.
Okay, we're using the end user, the purchaser's deposits for a portion, and then the bank, if we've sold out, usually how much prior to breaking ground? If we've sold out the units, how many, or the homes or whatever we're building?
So obviously varies from project to project. I mean, the simplest way to look at it would be a high-rise project. You're typically selling somewhere between 60 and 70% before the bank will come in and give you your construction financing. Low-rise is a little bit more complex because there's multiple phases and you may be building in different parts, doing servicing on different parts, et cetera, et cetera.
But the reason why we can make, and I didn't actually ask you, I want to ask you now, on real estate development, land development, partnering with the builder, partnering with the developer, all synonymous. as opposed to the value adds that you talked about earlier, what's the projected return on investment on this?
So on the development, we really target 20% annualized, just simple math, non-compounding. So again, on a 5-year investment, we would look to double investors' money.
Okay. And minimum investments you already talked about. And when do I get that return on investment along with the principal? So Rav invests $100,000, 4 or 5 years later, I've made $100,000, so I get my $100,000 and my principal at that time?
Yeah, so again, really when you look at development, obviously it's not a cash flowing business until people move into the units. So as people move into the units is when the capital starts to flow out. Obviously first is the repayment of debt, second is the return of all invested capital, and then third is a profit split. So again, we show it as kind of what we expect for the entirety of the project as an example of 5 years, but in reality you may have distributions over a 6 or 12 month period where you're getting your return of capital. A few months later, as more units close, people are moving in and the funds flow through the limited partnership. You're then getting your profit split, et cetera, as you go through it.
So what is the risk in this type of investment vehicle?
So again, I think you could obviously, say a long list that could go right or wrong in any type of real estate. But, I think we've really tried to think through and put ourselves in a good position with our partner and our structure and our expertise, and really think that the biggest risk in what we do is time. So again, obviously, if you wanted to say, well, what happens if the market drops? We've thought through that. We're buying the land properly. We're not over levering, so that if we do need to wait an extra 6 or 12 or 18 months because the market had a correction, we have the ability to do that. We're never putting ourselves in a position where we have to sell the product at a specific date and time. And so again, really when we look at that and talk to our clients, we always note that time is one of the biggest risks with investing with us.
Meaning that if I invest, it's not a stock. I'm not pushing a button and getting my money out. My money's in there because we are in the manufacturing business. We're building something. And for whatever reasons, it might take 6, 12, 18 months. Okay, I get it. Listen, I love having you on the show. I love hanging out with you. Time flies when you're learning and you're having fun. BJ, thank you so much for being on the show with me today.
Thanks for having me.
And thank you for tuning in. Without you, we wouldn't have a show. For more information on this show or any others, or to become an everyday investor insider where you can get investment opportunities, tips, advice, go to everydayinvestor.com and sign up. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon.